And then lastly, the one thing you could point out too with the 12 to 13,000 level, it's the usual correction or bear market lows, right? 80,
Yeah.
85% on Bitcoin. Yeah, so Bitcoin continues to dance around the key level from 2017, right? And that's kind of been the level we've been around since June, which is absolutely remarkable that it stayed that long. So you can see very clearly, like if I zoom out on this chart, here's your 2017 high, and look at how you've just been chopping around this level. Here's a downsloping trend line that's resistance. You can see it hit right here, and then we kissed it right there as well. Now we are inching below that line.
Yeah.
So at some point, this area is going to give way, and you're going to see price action really tumble. And I think that's the case where I could win the bet, is if you really get that sell momentum to the downside here. That could be, again, what we could end up seeing. So let me get my arrow there. There we go. Yeah, for me, that's the target. That's the first target, right? So you're looking down to around here. The reason you get that level, you can see this pivot high right here from the mid cycle period. That's going to be a ton of support, and that's right around 13 to 12,000. So that's where I'm getting that technical level. It's also, I believe, a measured move where if you look at this, right? So let's do another trend line here. If we look at this move down here, this was pretty much a straight line. And then if you look at this move, and then basically you do another one like that, it takes you right down towards that percentage-wise level as well. And then lastly, the one thing you could point out too with the 12 to 13,000 level, it's the usual correction or bear market lows, right? 80, 85% on Bitcoin. So there's another reason why that should be a little bit of support. You're going to get a lot of investors that are going to say, holy cow, we're down 80 to 85%. This must be the bottom. That probably means it's not, but at least it's a bounce level. No, you're right. You're right. So to me, I think you're going to get a bounce there just because that's the nature of charts where you're going to get some buyers to come in. But I have it penciled in. That's my high-end target. My low-end target, unfortunately, is all the way down to about 3,500, which would be your worst-case scenario. So like if we repeat the dot-com collapse and everything like that, then you're looking at that 3,500, which would mirror the percentage drop that Amazon dropped when it collapsed in 2000 from the dot-com collapse. So, I mean, you basically look at the dollar chart, and the dollar is everything right now. So the dollar is all tied to the Federal Reserve. So the more aggressive the Fed tightens monetary policy, whether it's a 75 basis point hike, they're doing QT right now, which is quantitative tightening, which is sucking money out of the system. It's basically meaning there's less dollars in the system, therefore price of dollars goes up, right? So it's a supply-demand analysis, basically. And that's why the dollar's been so strong. The market hates that, right? The market has been addicted to free money, cheap money for so long. And so it's inevitably you have to see these asset prices come down because there's less money in the system to purchase these assets. Yeah, so gold continues to kind of hover right around this support area here. So we can see right around this area, there's a lot of support. If we can draw a trend line, you kind of hit it here, and all the way over. Now, the key is on gold is that a lot of people bash gold, but honestly, gold has been like, if I think anyone could go back and redo 2022, they would say, if you had to pick an asset, where would you put all your money? And the answer would probably be gold, because it's only down 5% or so on the year versus the S&P, Bitcoin, and all these other assets. So the fact is, it's down because the dollar has been so strong. And I think this is important for investors to understand. If you were in Europe and you were trading with euros, if you're in Japan and you're trading with yen, then gold is actually positive or nearly positive on the year, but it's just because it's in dollars that it has taken a hit because the dollar has gotten so strong. The other thing to keep in mind is the dollar rallied 15% this year, right? Gold is only down 5 or 6%. To me, that's a strong standout. Because again, if you think about it, if someone told me at the beginning of the year the dollar was going to be up 15%, I would have said, okay, well, gold should be down 15% then, right? That's the equivalent. It should move 1 for 1 inverse to the dollar. And the fact that it's only down 5, 6% to me is a relative strong indicator. So I'm already in gold. But I'm in at a point where I would gladly add to it, as I'm a believer in it. I'm a believer that the Fed eventually goes back to lenient monetary policy when the economy gets bad enough. And so, for me, if it breaks here, you're probably headed to 1550 or so, this next pivot point, and that would be the next big area of support on a technical basis.
Would you be buying there as well? Would you be buying aggressively or just slowly?
I think for me, it would be medium. You know, it wouldn't be ridiculously aggressive because for sure I've been around long enough to know that even my best levels can fail, right? So it's knowing that the level is a good level. It's understanding the macro analysis with the Fed and with what's happening with the dollar and the gold chart. Eventually, the dollar is going to pull back as soon as, and this is the key, guys. If the Fed comes out on Wednesday and they're like, okay, we're going to raise by 75 basis points, but we're going to maybe be slightly less aggressive, the dollar will drop sharply and gold will rip to the upside. So basically, as soon as we see that pivot by the Fed, that's when gold starts to take off because the dollar will drop. And by the way, you'll see a bounce in Bitcoin there. You'll see a bounce in stocks. I mean, all risk assets will get a bid when the dollar falls. Yeah, so one of the things I'm keeping an eye on here is that we did break this upward sloping trend line just a few days ago, and it does leave the markets a little vulnerable going into the Fed. So, you know, as much as I think the Fed should be pivoting because I'm worried about the global and domestic economies, this chart does tell us that there's a chance that, and it probably will ultimately happen, is, you know, we may get a bounce on the Fed, we may not, but it's going to be short-lived, and then the markets are going to curl down and retest their June lows here. So the S&P chart is not a great chart right now. It's a little oversold, which leaves the door open for maybe a 1 to 3 day bounce. But ultimately, as long as it stays below this line, the most likely, the probabilities dictate a move down to this June low. Yeah, so there's a few out there that I've been kind of, you know, eyeing. So one of them that if the Fed does pivot, I think is oversold is this chart of Microsoft. So Microsoft set a nice little pivot point down here. That's kind of a nice one. Ultimately, I do think down the line, Microsoft goes lower, but on a shorter term basis, you should see some sort of bounce here. Another one, and this one's been kind of the frustration of me is GSK. GlaxoSmithKline. It pays a monster dividend. It's a pharma play, which in recessions, pharma, you know, if you need your diabetes drugs, if you need your blood pressure drugs, you're still going to buy them, right? I mean, they're not going away. They are dealing with some lawsuits right now. But to me, this chart just screams technical bounce. In addition, look at this trend line that just hit here. Let me go to my weekly chart. And you can see right here, this trend line right across, and you're hitting it right there. So there should be some sort of technical bounce coming on GlaxoSmithKline here in the near term. That's kind of one of those plays where in a bad market, it's probably not a bad play to hold because it pays a big dividend and it's already discounted. Let me see here. Ooh, that's a good question. No, I think for the most part, I mean, you know, some of the tech names are beaten up, like a Meta. Yep. They could be getting close to a bounce level. You can see these levels on Meta I've isolated down as major technical support. So that's still a little ways lower. It looks like the high end is around 138, so still another potential $8 lower. But that does look like a really good bounce level on Meta. And then for me, you know, I'm continually looking to GLD. I've even kind of scanned TLT today, which is inverse bond. So when yields go up, this goes down. But it's getting, you know, it's getting close to some interesting levels here, and it's really oversold. And what that could also be is a Fed pivot. If the Fed pivots, then you're going to see this start to rip to the upside in the near term as well. So I would say those are the majority of them. You know, I'm kind of being as careful as I can, but still trying to create alpha.